Let's practice amortization calculation for intangible assets. Before we start, subscribe to our channel for more videos. Let's analyze how to estimate acquisition cost of a patent, which is an intangible asset. Also, let's analyze how to calculate its amortization. Here is the financial data related to the patent. The company incurred research and development costs of $150,000. Also, the company paid $24,000 in legal and filing fees to acquire the patent on July 1, 2025. The patent has a legal life of 25 years. Its useful life is only 12 years.
Let's estimate what amount should the company record as patent amortization expense in the first year. For this example, US GAAP will be used. This is important, since accounting for intangible assets might be a bit different under different accounting standards. Here you see possible options for the answer. Let's now make necessary calculations and find out which option to choose.
In order to calculate patent amortization, we need to know its cost basis for amortization. Such cost is also called capitalized cost. And we need to know useful life of the patent. Once we know the capitalized cost and the useful life, calculating annual amortization is straightforward. We simply divide the capitalized cost by the useful life of the patent. This gives us the annual amortization expense, which will be recorded in the income statement each year. Usually the straight-line method of amortization is used.
First, let's talk about research and development costs under US GAAP. All R&D costs must be expensed as incurred, there are no exceptions. You cannot capitalize any research or development expenditures, even if they lead to a successful patent later on. This is a key rule in US GAAP. R&D is never part of the intangible assets cost. Let's see how to treat $150,000 of R&D costs, which are given in the financial data. As already explained, under US GAAP, these costs are not part of the patent's capitalized cost. Instead, they are recorded as R&D expense in the income statement, in the period incurred. This means the $150,000 is completely excluded from the amortization base. It will not be amortized over the patent's life.
Next, let's look at legal and registration costs. Under US GAAP, legal fees, filing fees, and registration costs that are directly related to successfully obtaining a patent must be capitalized. These amounts form the capitalized cost, or carrying amount, of the intangible asset on the balance sheet. However, if the company incurs legal defense costs and the defense is unsuccessful, those costs must be expensed immediately. They cannot be added to the patent's cost. Let's check how to treat legal and filing fees of $24,000, paid on July 1, 2025, to acquire the patent. As already mentioned, under US GAAP, legal and registration fees that are directly related to successfully acquiring or defending a patent are capitalized. Thus, $24,000 becomes the intangible asset. It is recorded on the balance sheet as patent. This amount will form the base for amortization going forward.
Next, let's talk about the amortization period under US GAAP. Patents must be amortized over the shorter of their legal life, or estimated useful life. Amortization begins when the patent is available for use, not when it's granted or paid for. Typically, companies use the straight-line method, unless another method better matches the pattern of expected economic benefits.
The patent in this example has a legal life of 25 years, which is the period of legal protection. A useful life of 12 years, which is the time the company expects to receive economic benefits. Under US GAAP, we must amortize the patent over the shorter of the legal life or the useful life. In this case, the shorter life is 12 years, so that's the period we will use for amortization. This ensures the expense is matched to the period when the asset provides benefits.
Let's summarize. We have estimated capitalization cost of the patent, which is $24,000. Also, we have determined useful life of the patent, which is 12 years. Now we can calculate annual amortization of the patent. We take the capitalized cost of $24,000 and divide it by the useful life of 12 years. This gives us an annual amortization expense of $2,000. This amount will be recorded as amortization expense each year in the income statement. And the carrying amount of the patent on the balance sheet will decrease by $2,000 annually.
So, the correct patent amortization expense for the first year is $2,000, which is option B. We arrived at this by capitalizing only the legal and filing costs, excluding R&D. And then amortizing over the shorter of the legal or useful life, which was 12 years. This aligns perfectly with US GAAP rules for intangible assets. Thank you for watching. Subscribe to our channel not to miss new videos.